You're listening to The Road to Financial Independence by CPS Investment Advisors, where smart planning and sound strategy keep you steady as you grow.
Welcome back to another edition to The Road to Financial Independence. I'm Mike Riskin, president of CPS Investment Advisors. And as always, I'm joined by my partner and CEO of CPS, Peter Golotko. Hey, Pete.
Hey, Mike. How you doing?
Terrific. Thank you. So we're here today with a sort of special edition market update. And there's some chaos-ish going on in the Middle East that we've received a bunch of calls about lately. So we just figured we would get out in front of it and kind of give our 2 cents in 8 minutes worth.
Well, some people don't want to hear my 2 cents, but this is really the reality of it is you got to take a step back and see what's really going on. If you take a look at how our economy works and how our stock market works, it works on the velocity of money going through our economy, okay? And we saw the stock market go down because we bombed Iran. But if you take a look at how much revenue our country makes off of Iran, it's close to zero.
Right.
This should not have affected any company's earnings that you own.
At least U.S.-based.
U.S.-based earnings.
Fortune 500
Fortune 500, and they could be multinational.
Right,
but
that's right.
Not a lot of countries outside of China deals with Iran.
Right.
China and Russia. So the bombing of Iran and eliminating the government over there should not have had the shockwave in our markets like it did.
Right.
So I always tell people, when things like that happen, when you take a step back, ask yourself, and I'm going to use Walmart, not a recommendation to buy or sell, but take Walmart for an example. The Friday before the bombing, and right now, did their earnings go down because we bombed Iran?
Right. Probably not.
Probably not. Are the people in America stop spending because we are in a war with Iran?
Right. Probably
They're not. Okay. So that in itself tells you that the market, although the stock prices may have taken a hit, the fundamentals of the earnings, which eventually is always going to drive the price of the stocks, there's nothing wrong with it.
Right.
It's actually performing very well, and it's going to continue to perform very well. Now, if you see something happen in the U.S. that could cause us a reaction like this, that there might be something behind it. Right. But when it's halfway across the world with a country that we don't do business with, we should not have seen this happen.
Yeah, and the obvious knee-jerk reaction was the oil, right? And so everyone's fearful, the oil and whatnot, and the reality, it's up to $100 a barrel one day, down back below 90, and so that up and down. And I think so kind of maybe discuss that a little bit in terms of what we see there, and does it really have effect, or is it really just a lot of noise created by the media out there?
Well, right now it's having an effect because the Straits of Hormuz, there's so much oil that goes through that strait. Yeah. And right now the Iranians are causing a lot of problems. Right. We've heard our president say that, they're going to help with the insurance and help, making sure that the crossing.
Try to get the flow going back again. Yeah.
Correct. And that's important, not only for us as consumers, but also for Iran to let those ships go, because the whole world depends on this energy. And for them to stop it and also bomb their neighbors and their friends, that's not going to look well upon the world looking upon them. And that could create a lot more pressure on Iran to do the right things. Yeah. Okay. So I think that might even backfire on them. How far are we away from getting the straits completely open? It could be weeks. Yeah, I don't think it'll be a long time.
Yeah, we don't know at this point.
We don't know. Yeah. All I know is all the information I've been getting is their military's weak. They don't have a Navy. They don't have an Air Force. And it's very hard to protect yourselves when you don't have those things. So this being a long, drawn-out war, I don't see that happening. And somebody came to me the other day and said, I think they're gonna do a draft. they're not going to do a draft.
Right. Yeah. I mean, I heard that too when I was in high school with the Gulf War.
Well, the Gulf War, they could have done a draft, but right now what we're seeing is a lot of this is technology.
Yeah. It's really the type of the war, and I think that, going back to the financial markets, I think, there's and we always pull up that slide. What's causing the markets to. Again, there's a difference between investors and traders.
Correct.
And certainly if you're a trader trying to get in and out of markets daily, weekly, monthly, this type of stuff creates a ton of chaos.
You need to watch this kind of stuff.
For investors, and that's typically what we are and our clients, looking long term, a lot of times the short term noise creates more opportunity than disruption.
We are buying, by the way. We're buying a lot. But yeah, these are opportunities. We see these opportunities because if you really look at the reality of it, Iran doesn't affect our economy.
Right.
So if the stocks are going down, maybe it's a good time to pick some up.
Yeah, if the price is going down based on some noise, and again, this is from a long-term outlook. And like to your point at the beginning, again, not to make any recommendations about particular stocks, but just focusing on Walmart for a second. Buying great companies, they're still going to. No matter what happens with this situation, they're still going to make a ton of money. They're still going to continue to grow.
Americans,
and companies like that.
Even if something happened that did affect our economy in a short term, these are still buying the quality companies in the right industries are important because we still have to eat.
Right.
We still have to take our pharmaceuticals. Yeah. We still have to pay our phone bill. We still have to get on Google because we don't have a life without it.
Yeah.
So there's a lot of companies out there that are going to do very well, even if things start to fall apart.
Right.
You want to add a lot of safety to your portfolio right now, I think, because there's a lot of noise out there and people are making some pretty bad decisions.
And I mean, just if anything, this just hones in that, why we preach diversification. We've had, the tech sector's gone nuts the last couple of years. So many people were overweight tech. This is just another example of why you just don't want to have too much of your eggs in one area, one basket.
Too much of a good thing isn't always a good thing.
That's right.
Yep.
So diversify across different sectors. Do pay attention to what's going on, but really that defensive, posture will really help you through the long run.
Yeah, and I think if you look back into some of our podcasts, that we talked about the first quarter.
We do talk about
being pretty rough.
That's right.
And you're like, well, Pete, why are you saying every first quarter you're saying it's going to be rough? Historically, the first quarter has always been rough. So, these are things that we know are coming up. We just need to close our eyes if nothing's wrong with the economy and the markets and buy stuff that's on sale.
And in all fairness, I mean, as we stand at this point in this podcast, the markets really haven't gone down that much.
No, they haven't.
So two things there. One, there could be a lot more volatility ahead. So people need
very well could.
And all we have to do is look back, not even 360 days, when with the tariff announcements. Remember, we had that sort of V. If you remember, late March, early April last year.
They're going to fire the Fed chair, tariffs.
Markets were down a ton.
And then they said they're not going to fire the Fed chair.
Right, and then it shot right back up. So again,
there's a lot of this, but there is some areas in the market that are oversold, I believe. I think we still do have an AI bubble until they kind of figure that out. Yep. There's still a lot of risk there. And you're right. We could see, in the next quarter or two where something like that might pop. And it might take a little while to get back. And the fear of something like that happening is, people go, oh my gosh, I'm losing my 401k, and they go to cash. And then it just starts to snowball until they stop. But what we do in that situation is we're still going to keep buying. Our portfolios have a lot of dividends coming in all the time. So we've got a lot of dry powder for these situations where, you can buy things on sale. And that's how people build wealth, is they buy things that people don't want. And then when it goes back, they've got more shares growing, more income coming in.
Yeah, so. and that's one of the main reasons we do these so-called emergency podcasts. Is the greatest value we can add to our clients is really keeping them invested.
Don't do anything.
Don't do anything when they're panicky, because it's almost near 100%. Looking back, if you were just to sell out when the market goes down, I mean that's just it's probably the worst financial move you can make.
Because
when you're trying to build your wealth,
Emotionally, when people sell out when the market's going down, they've gotten to the point where they've thrown the towel in.
Right.
It's gotten so bad that they can't take it anymore. They go to cash. But then if you try to time the market, you got to do it twice, right? You got to be able to get in when the time is right. And usually the people that sell out usually sell at the bottom, and they're going to wait until all the news is good.
Yeah. That's
and
right.
By that time, they've lost money. They're buying back way above where they sold.
Now, in fair, a lot of people do buy risky-ish type stuff. So when you look at that, these
Lower your
moments-
risk.
So these
Lower
might be
your
opportunities to lower your risk
Absolutely.
by risk off type of trade. But if you're properly diversified and you're in good stuff, high quality, know what you own, why you own it, then
Enjoy your life.
if the markets go down, then we need to be buying some more.
Yeah,
Enjoy
and
those
just know
dividends.
that we're not panicking when there's no reason to panic.
And if you own the right thing, you're still going to be getting those dividends every quarter.
Absolutely. Let the stock go down a little bit. You're still getting the same amount of dividends that we're going to raise it next year, and we'll use that to buy more stock that's on sale.
There you go. Well, great, Pete.
It's beautiful.
That's right. Well, thanks for the quick market update. Just checking in. And if anyone has any questions out there, please call us 863-688-1725 or visit our website at www.cpsinvest.com. I think it's also info@cpsinvest.com, and we'll be glad to answer your questions.
And if there's anybody out there that you think could use this information, please forward this to them.
That's right. Yep.
The information provided in this podcast is for informational and educational purposes only and should not be construed as investment, legal, or tax advice. CPS Investment Advisors is a registered investment advisor with the U.S. Securities and Exchange Commission. Registration does not imply any level of skill or training. The opinions expressed on this podcast are those of the host and guests and do not necessarily reflect the views of CPS Investment Advisors. The information discussed is believed to be accurate at the time of recording, but may not remain current. Listeners should not consider the discussion or any information shared as a solicitation or recommendation to buy or sell any particular security or investment strategy. All investments involve risk, including the possible loss of principal. Past performance is not indicative of future results. Before making any investment decisions, listeners should consult with a qualified professional about their individual circumstances. For additional information about CPS Investment Advisors, including our services and fees, please review our Form 8, which is available at www.advisorinfo.sec.gov.